Hey everybody, hey traders, happy Monday. Chris Pulver here. Welcome to the weekly outlook. This is the week of October 26th through the 30th. I have some really important announcements before we get into the charts here. Let's talk about last week's market moves. We had everything in the red except for Bitcoin. We had the Dow Jones down just less than 1% at negative 0.94. We had the S&P 500 down negative 0.55. We had the NASDAQ down over 1%, negative 1.06. Bitcoin was up 14+% for the week, bringing its total to the year. Bitcoin year to date has been up over 80%. Now, whether you are an enthusiast or you're a hater of cryptocurrencies, there is no denying that there's growth opportunities. In fact, this year alone, when it comes to the growth levels, we're talking about the NASDAQ that's found a way to carve out around 30% for the year. The S&P is still hanging out around 6 or 7% for the year. The Dow Jones, the Russell is flat for the year. We have gold up 25%. We have oil down 35%. We have Bitcoin up 80%. So there is opportunity out there. We're starting to see more legitimacy in cryptocurrencies. PayPal made a big announcement. PayPal is one of the most widely accepted and used pay form options out there, outside of cash and credit. And I know that we have central banks discussing cryptocurrencies. There's something potentially being rumored around the central bank for the U.S., the central bank digital currency. We know that China is looking into this. We know that other countries around the world are looking into this. So look, I'm not all in for cryptocurrencies, but I think there is a tangible value to it. I think it is an interesting hedge opportunity, and it could be something amazing. It could be something that's an absolute bubble. I don't know, but I'm investing in it. I am playing it. But I heavily trade stocks. I heavily trade Forex, cryptocurrencies. In fact, this last week, I looked at actually trading art with some interesting things that if you want to know more about, join my trading room. I'll share that this week with some traders. But big announcement. If you want to trade with me and my team, Gary Fickhart, Tyson Clayton, we are going to be hosting an election event next week on Monday, Tuesday, and Wednesday. Monday is a game plan day. It is free for everybody. And we will be game planning. If Trump wins, here's what we're going to do. If Biden wins, here's what we're going to do. And so everyone can see that game plan on Monday. You can also attend our day 2 and day 3, where we'll be live trading together during the election night and carrying that on through Wednesday's trading day, potentially even throwing in bonus sessions on Thursday and Friday, depending on how things are going, how volatile the week is. Now, like I said, we don't have a crystal ball, but what we do have is a ton of experience and great systems and strategies to trade. And we're going to be walking through, traders, what we are doing. We think that this entire year has been a very common theme of risk on versus risk off, stocks and Forex and how everything correlates or how they don't correlate. Like, there are tons of broken correlations this year, but it all comes to this kind of crescendo, this apex of volatility meets uncertainty meets whatever the markets are deciding to do. Like, we have clearly seen a dormant market the last couple of weeks. We've seen a lot of indecision. And it makes sense that, okay, what do we have right now that could let the market rally? We have a huge earnings week this week, right? With companies, I mean, we have like pretty much every FANG stock. We have Apple, Amazon, Google, Facebook with earnings this week on Thursday. We have Beyond Meat, Microsoft, 3M, Etsy, MasterCard, Boeing, Ford, Gilead, Exxon, tons of companies with earnings this week. So if earnings are beating expectations, is that enough just to, who cares about the election, and just let the markets continue to run? Or is it priced in? Are the markets at these highs? We deal with what's going to unfold during the election, and it continues to be like a make or break. Is the election a make or break for the stock market? Will we still have a holiday rally and Santa Claus rally to wrap up the year? Is this the time to just push as hard as we possibly can to the end of the year before things get really bad next year? We don't know. So like I said, if you're uncertain, if you don't know, if you don't have a good plan to trade this election and trade all this volatility and how to position your portfolio, make sure you tune into that event. So to share that link, like I said, everyone can attend on day 1. If you want to trade with us live on day 2 and day 3, I think it's going to cost you like $10, maybe $20. But that is to make sure that you are, in with us, trading live Tuesday and Wednesday. And again, if we have a great turnout, I would love to open up that for everybody and have some bonus sessions on Thursday and Friday. We can spend the entire week together. So I will include that link and the page to get to the election event inside the show notes for today's episode. All right, so if you're on my YouTube channel, click on the description below and check out the link for that election event. All right, so let's go ahead and take a look at the markets here. Before we begin, we understand there's risk in trading. Please and always use trade capital only. And you know the dealio there. If you're following me out there on social media, on Instagram at pulver.chris, Twitter at pulverchris, on Facebook, YouTube, just type in my name. You'll see my page, you'll see my channel. And again, I appreciate all the subscribes. Click the notification bell, smash the like button. If you do it right now, just do it right now. Just hit the like button. I hate asking for it, but for the YouTube algorithm, that's a really important thing that gets my video up towards the top. This is totally free stuff for weekly outlooks. This is free education that I offer, and I appreciate all the shares and the likes, and that helps my page get noticed. Okay. Anyway, let's go into the charts. So I want to take a look at a handful of things. So let's just start off with the SPY. We are down 1.67% on the SPY. That's 1 2/3% in the red. As I'm doing the video right now, it's 10:55 a.m. Eastern time on Monday the 26th. And last week I thought, you know what? It's a perfect time to see some risk-off trading as the election nears. We are looking at the SPY in the red. We're looking at the Qs in the red. We are looking at the Dow Jones in the red. So the DIA is in the red quite a bit, over 2%. We're looking at the VIX spiking higher. The VIX actually has climbed up towards $30. Let me see what the VIXY is doing because I have some call options on that. We're up to 19.11. If I can get my VIXY up above $20, that'll be in the money, which is good. I'm looking for higher volatility through this week, higher volatility certainly going into next week. If you're looking at some option plays on volatility, they have some pretty good expirations out as far as, I mean, you can go into like January if you want to, but I'm looking at some call options with a November 20th expiration. What else do we have here? So risk off is kind of my tone. As far as the currency world, let's take a look at currency strength for today. Currency strength for the morning. We have the dollar strong. The New Zealand also was strong. We have the pound that had some strength that gave it all back. The Aussie is back to baseline. We have the CAD as one of the weakest currency pairs this morning. Volatility-wise, things are pretty tight. You can see some jumps in the Aussie during the opening, Sunday night's open. And early, kind of Australasia trading, but not a ton of volatility in Forex, but it is interesting to see the dollars getting stronger, the Swiss and the Euro slightly weaker. I am long Euro Swiss, I'm long dollar Swiss. I am also long New Zealand Swiss. And that's it. I only have 3 total positions with exposure right now. I have a ton of margin to apply. I have robots at the ready, and I am very much ready for, this week's trading might be pretty quiet, and next week's trading I'm looking to get pretty active. So, volatility is likely going to pick up in the stock market. I am watching for some risk-off trading. I also shorted Netflix last week, and that's working out really well. We're at 486. I shorted this around $530. I just simply traded some puts. I bought puts, and it went down. So this is in the money. I'm just trying to think, can we get a little bit lower? I might look to see if Netflix can push lower into this 480. If we go 480 or lower on Netflix, I'm going to take some profit on that position. This is another new opportunity I'm looking for this week. This is SAM as the ticker. This is Boston Beer Company. The stock jumped up and gapped higher, as you can see from last week. They jumped 15% on record high earnings. We have Boston Beer raises financial forecast for the year. If anybody has seen the trend in seltzers, Boston Beer is responsible for Truly, Truly. I must say that on the golf course, I've had myself a few Trulies, and they are pretty tasty. But I'm looking at the technicals, and this, you know what? If I showed the stock without a label, you might think like this is some, penny stock, or this is Tesla, this is some biotech stock. Like, this is insane. We had a dip in March at 294, and we have jumped literally on a rocket to the upside of over $1,000. I did talk about this recently with some of my high octane traders. I was looking at a potential short around $1,000. I'm glad I didn't short it. I didn't see any structure. I certainly don't have any confirmation. Now, going to a daily chart, why would I consider some put options? Because there is a massive gap right here, and we had an earnings beat. But if we see the overall markets selling off this week, I think that even if we drop back down to, let's say, $1,000, that's enough to turn a put option trade into profit. So it might be a very short-term trade. I was looking at the options chain this morning. I think I have some expirations into early November, maybe even mid-November. I'm going to debate on what I trade, how many contracts I buy, but I think this is a pretty decent trade. If it closes above these highs, I'll look to get out of it. But I'm looking to get this in the money and in profit as soon as possible. This is a kind of a higher risk trade because the trajectory is so bullish, but I do think with having, a massive gap in inefficiency here, a massive gap in inefficiency here, I'm looking for this to at least come back down towards $1,000 or lower. $1,000 would be fantastic if I'm shorting it now and price drops $70. That should make my options contract pretty profitable. So that's one, short opportunity I'm looking at right now. I'm looking overall to continue this risk-off tone, even though we have a ton of earnings this week. Keep that cash, keep that margin at the ready. When it comes to Forex pairs, what am I going to be watching? I'm going to be watching the dollar yen. All right, the dollar yen at 105. I'll go ahead and just box this level in. So if we see 104 broken or we see 106 broken, okay, this is where I'm watching the dollar yen really carefully. I think that there is an incredible amount of volatility and potential on this dollar yen, and levels I don't want to ignore include these levels right here. Let me use a horizontal line. So I like this high right there, and I like this low down here. Now, I'm not taking any action in the dollar yen right now, but I think this is a really good gauge to watch as everything unfolds in and around the dollar, in and around the yen. Both of them are considered safe haven currency pairs. The yen especially is a highly motivated sentiment-based currency pair. And so if the markets are cranking, meaning the stock market continues to rally and sentiment all of a sudden is bullish and convincingly bullish, then we will likely see this dollar yen heading higher. I didn't draw that very well. So let's try that again. We'll likely see the dollar yen breaking above and heading into highs around 111. If we see sentiment getting crushed and the dollar getting super weak, then this break below 104 opens up room to 101.50 where we had our March low. We may even slide aggressively down into the massive parity level at 100. So I'm interested in trading the dollar yen, and with the dollar yen breakout above or below, I'm looking to compare that to the other yen crosses. So would I trade the euro yen, the Swiss yen, the Aussie yen, the CAD yen, New Zealand yen, the pound yen? Possibly. I might steer clear of the pound yen only just for high margin, but the other ones look like if we follow a direction, if the basket is following bullish sentiment or bearish sentiment, I'm going to be trading along in that direction. But I think the catalyst is going to be where does the dollar yen show us it's time to get in. In between 104 and 106, I'm not interested. I don't care what this currency pair does in between those levels day to day, but when we're above 106, I'm looking to be bullish. When we're below 104, I'm looking to be bearish. Traders with me last week in my room, we talked about this in my flex trading room. We actually set up some robots to be selling below 104, and we'll be monitoring that level closely. And I'll also look at potentially robots above 106. But I want to see what happens first, get some confirmation, and then look at letting some automation trade. So that's one pair I'm watching really closely this week. I'm also long on the dollar Swiss. Currently, we came back to these lows at 907. Actually, the lows around 9030 with the exact lows around 9,000. Now, I'm asking this question for the dollar Swiss. Are we holding these lows to shoot to the upside to challenge this high, get back into this 93.50 pocket? This is where I am long towards. Okay, if the dollar Swiss continues to drop, there is room for this thing to drop down towards 88.50. So if you're going to write down a level here, if there is some continued bearishness, 88.50 is where I think we form a really solid base. And I'm looking for bottoms to form. I'm looking for oversold conditions and divergence to form. And from there, I'd be looking for this to offer a move back up towards 93.50. So I am currently not short. I am holding longs from these lows, and I'm looking to get this back up into 93.50 and hopefully higher. I hope that this can shoot all the way back up towards 9,900 or 1.00. But for right now, with some of my positions that are built in here, some of my add-on positions that I'm waiting for, if this goes to 93.50, I'm going to take that profit. That's dollar Swiss. Euro Swiss is another one that I'm long. I started to build off of support around 70 or 107.50, and I'm looking to see if price can get back into 108. If you're interested in some buy levels, we have current support at 107 that seems to be holding pretty nicely. If it falls back into equal lows, that's around 106. If we fall into previous lows, that's 105. So between 107, 106, 105, these are all massive support levels that I'm looking to get long on this dollar Swiss and get back into these highs, which is my profit target at 1.1050. So what I'm looking for with confirmation, we've had about 3 months of indecision on this Euro Swiss. Now we're coming to test these lows. I am holding long positions, And I'm going to be very aggressive in adding to my long positions if we can get a nice clean break above 108.50. That is a trade into setup that I've outlined in great detail in my trading room. Some systems I would run: Right Trader Max, SSL. If that sounds familiar to some of you that are watching, they're in my trading room and in my classes. If you're just wondering what is this trade going to be, if it breaks above 108.50, and I'm looking for a daily close. If a daily closes above 108.50, I would simply have orders just ready to go. Meaning I would just have an order set at 108.75 and 108.95 and 109.15 and 109.35. I would just stack some orders to the upside and plan on this to just run to 110.50. And you can put some buy stop levels in the way. If you want to know the difference between a buy stop or a buy limit, you can watch my video on broker order types. So buy stops will be up above current price. Buy limits will be down below current price. But I have this currency pair surrounded to buy lower or add to my winning positions and add to some breakouts. But I'm going to be taking profit here at 1.1050. There's a yearly pivot also at 110.45, previous highs back here from November of last year. And it's a pretty easy structural level to get to. I hope the market cooperates, of course, right? Okay, that's Euro Swiss. Another one that I'm watching very carefully, and I hope this one gives me a fantastic setup, which I think it's already starting to do. The Aussie New Zealand is at 106.48, and I hope we can slide a little bit lower. I want this thing to slide a little bit lower towards 106. I'm going to start accumulating 106, 105, 104, 103, 102. I'm going to start buying some very small positions in here. This to me is a medium-term to long-term trade. It might take 3 months, it might take 6 months, but if I am right for this area to form a higher low, we should be making higher highs. All right, so I'm looking to accumulate some small buy positions in here, add to my winning positions until we can get back to at least this level. This is my target 1 is 10800. Target 2 is going to be back at these highs. Target 3 is all the way up towards fresh highs at 114, 1.14. Right? So if we can score a point here, and I've already drawn this out in my trade room several times, will this be a, we score a point for the bears, pull back one more time, head down into this area. Then we start accumulating for a big move to the upside. That could be a scenario where I buy it at 106. Maybe I take some short-term profits, and then I build back up again. All right? Or this might slide, briefly pull back, slide lower, 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 and then just skyrocket into this area, and then we start, the trajectory again is very bullish. So either way, I'm a buyer on the Aussie New Zealand, but I'm waiting for 10600 or lower, and I'm hoping that this currency pair cooperates. There's a really nice inefficiency there. I really want to score a point, at least for the bears first, try to get some buy levels. I have all of these levels as well. I'm looking to start accumulating some buy positions on the Aussie New Zealand. Anything else? I'm long New Zealand Swiss. That one's really not much to look at right now. It's just kind of a long-term hold. I'm looking for something like this. If we have some decent structure break on the New Zealand Swiss, we're holding these lows so far. Can we, get a launch to the upside? Can we get above 6150, 6200? Can we break above these areas, revisit these highs? I'm looking for the medium-term New Zealand Swiss to get up towards 6550. That was, of course, everything that we had before we collapsed back in February and March. This could be a much longer trade. I mean, this could be something that takes, I'm going to go to a different color here. Let's say we just continue to chop down here, and we set up a really nice base of support, we start to break. Well, we could certainly buy it earlier if we have good confirmation to take it up towards 6,200, take it up towards this high around 6,300. But I'm looking to, small buys around levels. Okay, there's one level, there's one level, there's another level. This flash crash low from March is one level. I'm looking to buy. These are at 25-year lows, by the way, for this currency pair. I know that with an extreme risk-off environment, this one might come back and retest some of these lows. So I'm keeping my trade sizes very small. But if I'm willing to hold this trade for the next 3 months to 6 months as an investor on New Zealand Swiss, I'm looking for this to be higher. Or if I can buy it nice and low, I'm looking for support to hold and just trade simply support and resistance. So that's it. My currency pairs are very few. I have literally dollar Swiss I'm long, Euro Swiss I'm long, New Zealand Swiss I'm long. I've taken my profits on Aussie CAD. I'm watching the yen pairs very closely. We've talked about some short-term opportunities on the pound crosses. I traded pound CAD, pound dollar last week. The pound continues to be kind of a day-by-day currency pair. With good volatility, the pound pairs are excellent to trade. The euro dollar is back down towards 1.1800. I still think there's a ton of resistance here at 1.12. Will we see 1.12 first, or will we see 1.15 first? I don't know, but I'm still looking to sell the euro dollar back down towards 1.15. So I still have a slightly bullish outlook on the dollar index, which means my euro dollar should be falling, my dollar Swiss should be rallying, and that's the direction I'm looking at for both of those. So we could go into, an endless amounts of currency pairs, but the reality is I want cash, I want margin, I want the ability to trade whatever currency pair sets up and confirms. Right now we have a lot of indecision. I've drawn a lot of boxes, a lot of channels. If we don't have clear breakouts, if we don't have obvious open spaces for price to run, I'm standing aside and I'm waiting. Right? And I have great strategies that trade consolidation. I have amazing systems and robots that trade highs and lows, and they get these little, scalpy support levels and resistance levels, and they take some profit, and they're super profitable. But if we have these monster breakouts and we're about to see, a 2-month trend cycle, I don't want to be stuck forcing robots or systems to trade consolidation if we're going to see some breakouts. And the other thing that I'm prepared for is volatility. Just so you know before we wrap up the video here, volatility can look like this. Okay, we can have indecision, and let me draw a box here. So we can have indecision, like think about that dollar yen. We can have indecision. Now, we can see volatility do this. Volatility can, from right in the middle, we can spike up to those highs and spike down to those lows, and we can go right back in the middle. Now, that is volatility, right? The market doesn't have to go anywhere for us to see high volatility. The other side of that would be this. If we're somewhere in the middle and we blast off to the upside and we break and close higher, we can see this new expansion move. We can see this breakout, this high volatility. Daily trading ranges are increasing, but we can actually start to see that a breakout cycle is occurring. So I don't want to be forcing my eyes, my visuals to be on one certain strategy when I think that the market can finally break loose. All these indecision patterns can break loose. If they don't, I'm still expecting there to be a lot of volatility. So it is a very important time to prepare. It is a very important time to make sure that you have, I would say, neutral. Like, be neutral, be objective, and don't have this extreme bias. I mean, in my opinion, if you join us for the election event next week, you will see that my game plan revolving around Trump win or Biden win, it doesn't really matter because they still have to, price has to show us what it's going to do. So if price shows its hand, that's how I'm going to trade. So whether Biden wins, whether Trump wins, whether it's a landslide result or it's a contested election, none of that matters because all of that is out of my control. What I can control is how I trade, when I trade, and what I trade. And the same thing with you. All right. So on that note, make sure you click the description and join us for that election event next week. Monday is a free day for everybody. Tuesday, Wednesday, if you want to trade live, it's going to cost you like $10 or $20. I would highly recommend you just do it. See what we do, see the tools and resources we have at our disposal and how we can take advantage of the opportunity because we'll see risk on, risk off trading. We'll see tons of movement. I'm watching the VIX. I'm watching the indices. I'm watching Forex pairs, how they all correlate. It's going to be a very busy week. But we're going to digest it together, and it's way easier to do it like that with some experts running these sessions and a ton of traders along for the ride with a great community effort versus trying to do it by yourself. Because it's, I mean, you might plan for the best, prepare for the best, but I'm a big believer that we kind of have to prepare for the worst. We don't know what's going to happen, and I would rather be safe than sorry. I'm not putting my profits this year in jeopardy for this election event. I'll make sure that I am safe and safeguarded. And even if I don't have a great week, I will still be profitable for the year and very profitable. So this is going to be a trade just like any other time, small, conservative, but I have a lot of neutral outlooks right now. I just want to see where price is willing to go. Not test, not wick high, not wick low. Where does price confirm it's going? Right? And so it's going to take this week a price action. It's going to take next week a price action. It'll take day-by-day price action, but we'll be watching, we'll be running our strategy systems around it, and we'll make some really good decisions. All right, so if you have any questions, let me know. Leave a comment on my YouTube channel. Hit that like button. I'll see you all this week in my trading room. We'll start Tuesday, Wednesday, Thursday, 8 a.m. to 10 a.m. I'll see you all next week. Register for that election event Monday, Tuesday, Wednesday. Happy trading, lots of profits, everybody. This is Chris Pulver, Weekly Outlook for October 26th through the 30th. See you soon. Bye.